And welcome back to the Lebenthal Report. It's Jordan Kimmel, Chief Equity Strategist and Portfolio Manager. And it's a privilege to bring on a longtime friend. It's Charles Rotblut, and he is the Vice President over at the American Association of Individual Investors. Thanks for joining us, Charles.
Thanks for having me, Jordan.
Well, you know, I'm a longtime fan, and AAII and I go back a long time. So when we restarted the show, I said, we have to have you on. I do believe, I'm going to let you go through some details, but I do believe you are the nation's largest individual investing group, and with a big focus on education, which I think is so critical. And you do it in a community style in a lot of ways. Why don't you kind of share? It's a nonprofit. It's incredibly inexpensive to be a member. Why don't you share a little bit about AAII, and then we'll jump into some details.
Sure, absolutely. So as you said, we are a membership organization. We have about 155,000 members, most of whom are individual investors, quote unquote, mom and pop investors. We were started about 42 years ago by Jim Clunan. He was a professor at DePaul University. And at the time when he started this back in the late 1970s, he saw a need that there was really a lack of education and resources for individual investors. And so that was the origin. We've since grown mightily since then. We do a monthly magazine, the AAI Journal, which I'm a member of. We have our website where we offer not only education, but useful tools, screening, fund information. We also have a local chapters programs, and we're expanding our community basis, but we also do national conferences as well. And so our goal is to really help individual investors become better managers of their own assets.
Right. And you know, here we are in the richest country in the world, and people knock our education system. I know it's a pretty good education system, but there's nothing in financial literacy in the younger ages. And it's amazing how I meet investors, Charles, who are really, you know, not well versed at all in the capital markets. And I think that's a shame. And I know that, you know, education is the key. And you know, one of these days we'll be flying around again. We'll be meeting in person. I think I've spoken at maybe a half a dozen states where you have breakout groups, which I think is just a wonderful opportunity to bring in experts and share their ideas. The magazine itself is great, but I want to also bring up something that you guys have, which I don't think anybody else has, and it's the screening area with over 60 different managers. So, you know, I've written some books. I was profiled for many years, and I wish I didn't ask to come off. It's a longer story, but there's lots of ways to invest, and whether it's growth, value, or momentum. Share, you know, this concept of every single month you could see what these strategies would theoretically pick. Then you can go in and see the factors that go into the stock selection. I think it's an amazing tool.
Yeah, and I know you're like me. You love quantitative strategies, and really our stock screens, they're really filters. So we're looking for stocks that have specific characteristics. And as you mentioned, it might be growth, it might be dividend, it might be positive revisions to earnings estimates. But we looked at both famous investors and also academic and industry research and said, okay, what are they looking for? What's their strategy? And we've tried to really make those strategies quantitatively available to individual investors. So they can go to our website. Members can go once a month, start every month, see everything that's passing. We actually recently launched an A+ investor service for those who want daily updates. That's available. It's a premium, but it's certainly available to those who want more recently updated information. But the big thing about screens, and what I always tell people, is they find stocks with the characteristics you desire. And often screens, as you well know, will lead you to stocks you never heard of. But when you start looking at them, you realize they have everything you want in a company. So I'm a really big advocate of using stock screens. I really think they help investors immensely.
Right. Well, you know, that's what I do. That's what the magnet stock selection process is. And interestingly, I didn't even know it, but I was interviewed, I guess, in 98 when my first book came out. And then a member called me up and said, I'm following you. And I said, where? And I was amazed by it. And, unfortunately, I came off that list. I had a real prominent place in that list for years, and from compliance, because I run real money, real strategies. So I want to mention one of them in particular because it really dovetails with what you do. And in fact, our last guest talked a lot about it. So one of my separately managed accounts is a dividend growth strategy. And I know you run a whole program on dividend outlook there. And so it's not only capital gains that makes the long-term return of the market. It's a combination of the two. And maybe rather than me share what I do, you share what you might look for in your dividend companies.
Yeah, so we look for our dividend investing newsletter. We look for dividend growth. So we want companies that are increasing their dividends, and we also make sure that they have the financial ability to actually raise their dividends. And it's interesting you brought up dividends because people don't realize, but historically, when you look at the long-term return of large cap stocks, about 40% of it's attributable to dividends.
Right.
Now, obviously, we've seen more buybacks take place, but I always equate dividends to marriage. So buybacks are kind of like you're dating. And if you casually dating and decide, I don't want to be available for Friday night, there's not much punishment. But
Right.
if you tell your spouse, hey, I'm not coming home Friday night, well, there's going to be a lot of pain to pay. And it's like that with dividends. People love their dividends. And if a company cuts a dividend, it's usually a warning sign. But if it's growing its dividend, then it's a sign by management they expect to have earnings and cash flow continue growing in the future to support that higher dividend. So it's a really good characteristic to find in a stock.
Right. And it's a huge source of income around the country. A lot of our clients at Lebenthal, it's not a go-go shop. We really are having people retirement money and they look for income. And we've been in this lower for longer, 0% interest rates, incredibly frustrating if you're in the bank. But you know what? If you use your screens properly, and I don't want to, it's the name of your title of your book, maybe better, rather than lucky, you'd rather be good.
Mhm.
But with the right screens, you find the right balance sheet companies, and there's a tremendous demand for them right now, and it just makes a world of sense to me.
Yeah, absolutely. And one of the things about bonds, and certainly you have an argument in terms of preservation of wealth, but when you buy a bond, you've locked in that interest rate. It's not going to change. But if you buy a dividend grower, they consistently raise their dividend, and every year, so that growth grows. Maybe it grows 5%, maybe it grows 10, maybe it grows 15, but every year not only do you have the stock potentially appreciating, but then that dividend perhaps is growing faster than the rate of inflation. So it's not just having increasing dividend, but it's actually increasing more than the rate of inflation. So you're actually being able to buy more with that dividend payment. And for retirees, that's really important.
Right. And you know what? When you wake up in the morning and there's some scary news out and there's something that makes you a little nervous, and in your portfolio, you've got companies raising their dividend 15, 20% per year, paying four times what they're paying in the bank right now. You just don't run to the computer to sell your stock. These things are held and they're in better hands, if you will. So let me just bring out something else. I think one of the things that we export in the United States, entertainment, all kinds of product. I think one of the things is our capital markets are also the envy of the world. And I know that you're doing work internationally. You have membership internationally. I know you're focused domestically, but specifically, I just want to bring up India for a minute. They are democratic. They're completely interested in investing. I speak to people. Their interest rates are going from 8 to 7 to 6, just like ours did. It's almost 10 years behind in operation. So you have operations in India and around the world as well. Am I right?
Actually, we're all here in the US, actually, right here in Chicago.
Oh, really? Okay. Because
Yes,
I
yes.
thought I saw membership outside the United States.
We
Okay.
do, yeah, we do have some members that are abroad, across the world, actually, which is fantastic. But our office is right here in the Chicago area.
Right. And I've spoken in the Chicago chapter and again over it at the school knee house. And just I think you have just a great program. I think that I'm not a shill for you guys. I've sold a lot of memberships. I think it's an incredibly reasonable fee. You could just share the fee, and there's an even annual fee. And while you're doing that, I want to ask the engineers to bring on Dominic and Mike, who've been in the business 30 years, and I'd like them to jump into the conversation as well. But share your membership fee, if you will.
Sure. So it's $49 a year, and that gets people the journal, gets them access to our site, our mutual fund guides, our ETF guides, our tax guides. And so there's just a lot there in terms of, as I said, not only information about how to invest, but also the tools to help you actually take the information and invest it yourself. And we approach it all as individual investors ourselves. So we're constantly thinking, what challenges do we have and what challenges do our members have? And what can we do to help them overcome those hurdles?
Right, right. Mike, Dom, want to jump in?
Hey, Charles, how are you? Thanks for joining
Good
us this
afternoon,
evening. I'm
Charles.
Michael.
My pleasure. It's good to meet you.
Same here. So Charles, I texted Dominic as you were speaking. I said, I have to ask him the first question because I was afraid Dom might steal it from me. During the GameStop ridiculousness 3 weeks ago, here you are, you have this organization dedicated to educating investors, as you use your word, educating the mom and pop investors. And now all of a sudden, you have these guys on this Reddit forum convincing people they could get rich quick. A lot of people got hurt. So I was just wondering what you guys were either thinking or what, more importantly, what you doing to try to educate your members to say, this is not a good idea.
Yeah, so I do a weekly commentary on Investor Update, and I was writing about it, and I brought up 2 points. One was that this is just pure behavioral finance at work, where people saw something going on, had to get in it, was worried about missing out. But the other thing I pointed out is that people don't realize just how big the universe of stocks is. So if we rule out all the exchange listed stocks that are priced below $4, maybe might be delisted, we're still talking 4,000 stocks. And you think about GameStop, and obviously GameStop took the headlines, and we had some other companies, AMC, et cetera. But if you step away from all the noise, you start realizing there's other games to be playing. And I think everyone was so focused on the hedge funds and let's get to hedge funds, not realizing that if you're an individual investor, you don't have to compete against the hedge funds at all. You can go any stock of any size you want, and it means that you can play a different game. And we really try to get our members to think about, don't try to beat the hedge funds, just play a different game. Let them have their sandbox. Let the Reddit people have their sandbox. Meanwhile, there's another sandbox off to the side that's completely uncrowded, filled with bargains. So we try to get people to think about not reacting to frenzy and really thinking about, what can I do to my advantage versus, let me go on this forum where I don't know who's giving this advice, what they're doing, what their time horizon is. Just step aside from it.
Thank you. All right, Dom, hope you have a question.
Yeah, I made a joke about don't steal my question, but he didn't quite steal it. But the theme is the same. We're a registered investment advisor. We're an asset manager. Everything we do is just core research, documentation, analysis, and then we try to make the best decision possible. But we have a new group of primarily young investors. This is their first time, their first onset into putting money in the market, and they don't seem to be using the kind of tools you offer. How do we educate these people? How do we get them to look at the picture more rationally and say, hey, this is long term, right? This is going to be for the next 50, 100 years of your life. Let's do this in a very logical, fundamental way that can have tremendous rewards for you down the road. How do you do that as an organization?
It's certainly a challenge because they are consuming media just differently. And we're doing things, we've gotten active on YouTube. We just recently formed some Facebook groups. So we're trying to actually go to where they are. But I also think, unfortunately, I think for a certain set of investors, they almost have to make some mistakes before they learn. And they start realizing, I need to do things differently. I did see a survey in the last week saying that a lot of new investors are actually starting out and just buying and holding, which is great. But I think, as an organization, we're reaching out. We are doing more things online versus both in terms of video, in terms of our community efforts, trying to actually reach people where they are. So our older audience, older members love reading, love getting our print magazine, which is great. But you have this new generation and they just simply consume media different. And so I think we just have to adapt and realize, okay, here's where they are. Let's come meet them there. And the people who are ready to say, yeah, let me learn a different approach versus following the guys that are talking about sports betting and now talking about stocks or jumping on the Reddit forums. Let me see if there's a different way to invest.
Charles, just to switch gears, speaking of investing, Dominic and I have been, and Jordan have been listening to the death of our business as a result of the robo investor for probably 10 or 15 years now. And honestly, it hasn't happened. But the younger investor, it does embrace that technology a little bit more. Could you speak to the robo investor and how many members do you think are using those types of forums to make investment choices for them?
Yeah, that's a good question. We don't have good data on how many of our members actually use robo-advisors. We know about 30% use an advisor. We think most of them are actually using traditional advisors. The robo-advisors, they have a role there. And I think for someone who has absolutely no clue what they're doing and they have a low level of assets, there's a role there. But what I tell people, yes, they're low cost, but the real value of an advisor is often just getting you to stick to your plan. And when you're nervous, you need direction. Maybe you need recommendation for another expert, be it maybe a trust, maybe it be health insurance or life insurance. There's a definite role for personal advisors that you just can't get from an application. And as I like to say, when you're really nervous, an application is not going to hold your hand. You really need a one-on-one for someone to quote unquote talk you off the cliff and explain, hey, here's this plan. Let's go back through your goals and let's think about why you're investing, what your time horizon is. And that's the one thing, although technology offers some efficiencies in terms of cost, a lot of investing is really behavioral, and having someone to help you behaviorally remind you of what you're doing and what your plan is.
Right, Charles, let me jump in here because I think you hit
Go
it
ahead.
on the head. And that's really, I think, what Dom was alluding to a little bit too, is that if you have a plan and you have an advisor, it sometimes can be better off than going it your own. And there's a gigantic change right now in commission structure where trading is free. So there's a modest management fee that you pay, but you could trade, you could buy, you could sell. There's absolutely no friction in cost. There are taxes to pay, obviously. But the main reason I wanted to have you on here is the craziness that I sense going on with the trading on moving averages, trading on group chat rooms. And I know that the focus is at AAII is all about education. So, and now we're all staying at home. So let me just make an offer from my side, from Lebenthal side. If we can help in any way with some more videos, with the groups, I look forward to the days traveling to the chapters again and meeting the group. But ahead of that, make it real easy. Maybe we could do some educational things and help, because to steal the thunder from an old retailer, the educated investors, the best investor. And the more educated they are, the better it is. And I just want to really thank you for joining us, taking the time. And I've had a long experience with AAII, and I think it's going to get even deeper and better.
Great. Absolutely. I appreciate it, Jordan. It was great talking to you, and I appreciate the opportunity.
Well, you do great work when the newsletter comes every month. I love reading it. You actually get amazing contributes, from all around the top experts in the entire field. So you're doing a lot right at a very modest fee, and it's about education. And you're looking well. It's nice to have you on, and we'll talk real soon.
Hey, Charles,
sounds great.
one last plug. If you
Sure.
want to tell our clients how to get a hold of your information, give them a quick shout out how to do that.
Yeah, absolutely. It's really easy. Our website's simply AAII.com.
It's the
Terrific stuff,
easiest
people. Get
address
on
in
it. Go
America,
look at it.
AAII.com.
Yes.
And I have a couple of nice articles on there, by the way, when you search.
You do.
I'd like to maybe get back into the gurus. Maybe we talk to Wayne, but thanks for joining us. We'll be
Sure.
right back.